Hi, my name is Pradeep. In this blog, I'm going to explain the impact of material ledger in our procurement cycle. In fact, this question was asked in recent one interview. So, what is the impact of material ledger in procurement cycle? As you know, in S4 HANA, material ledger is mandatory, and before posting any transaction related to logistic, material ledger activation and its configuration is mandatory. So, in that point of view, I'm going to show you one scenario. So where we are going to procure the material with some difference will be there. So we will capture those difference and we will see that material is accounting point of view, and also we will see from the material ledger point of view. So the payment difference part, the procurement difference part we are going to capture here, and we will do that analysis. So this is very interesting question was there in interview, and it is very important also. Although material ledger point of view, lot of other cycles are available, or production difference is there, your goods issue difference is there, but in this scenario I'm going to explain the procurement difference, because exactly this question was asked in the interview. So let's take one example so that we will see in detail. So for this demonstration purpose, I have created one material master in S4 system, and that same I'm going to procure here. And my local currency, let me explain about little bit theory about this scenario. So my configuration point of view, my local currency is INR, and I'm going to post the procurement entry or the purchase entry in USD. So that means I'm going to post the transaction in foreign currency. Okay, so from that point of view, we will see what are its impact in our material ledger. So I will create here the steps are, I will create one purchase order, one PO I will create here, purchase order. So this purchase order will be in USD, which is my foreign currency, because my company code currency is INR, local currency INR. So if we are going to purchase in other currency, then what will happen? We will see. Then next, I am going to process one goods receipt, which is your GRN, goods receipt I am going to process here with maybe payment difference will be there. It's not payment difference, sorry. It will be our price difference. Right? Price difference will be there. Price difference may arise because of your material rate, which is not equal to our purchase order rate. And when we are going to process the goods receipt, as you know that accounting entry will be there. So the accounting entry will be inventory account is going to debit. So inventory is going to debit. Then we are going to have GRIR is going to credit. GRIR account is going to credit. And here we are going to have the price difference. For your reference, I am using the material master with standard price. So that's why price difference separately we are going to capture. So this difference, if it will be there, that we are going to capture here difference. Plus we are going to process with invoice in logistic. So this is nothing but our Migo, and this will be my row. So we are going to have invoice, and with reference to invoice, the accounting entry will be GRIR account. GRI account is going to debit because initially GRI account was credited. So this one is going to debit. Then here I will intentionally change, because let's say purchase order was created 15 days before or with a different date. And now the exchange rate is different. So because of that exchange rate difference also we are going to capture. Exchange difference will be there, and the credit will be the vendor. Okay, and in this entire process, we are going to capture the difference, both our price difference and exchange rate difference, and that we will analyze from the material ledger point of view. Okay, let me create one purchase order. And I'm going to use the material 647, the material master, the material number. And this material is created with our, just make sure that in this material ledger must be activated. Let's verify it. 647 is my material master. This is my plant. So you can see material ledger is active and price determination is activated with single and multi-level. That is our 3. And the price, the material master is maintained with standard price. So price control is standard price, and we will see the PUB also. Okay, let me create the purchase order. I'm selecting the vendor, business partner with logistic role activated, FLVN01. Purchase organization, here it is S07P. Purchase group, company code. And currency will be USD. That is my foreign currency because local currency INR. And the exchange rate automatically, whatever it is rate updated in my server. So same rate I am going to continue. Whereas during invoice, I am going to change the rate so that we will have some difference will be there. So let me note the rate here so that for future we will change it. So I'm going to create the purchase order with whatever the rate updated in the system. Material number 647 I'm going to purchase. And let's take the quantity as 50 units. Expected delivery date, material group, plant, storage location. Here the schema settings are not there, so manually I'm adding this value, the condition type. And let's take the value as the PO price. The PO price, let's take here point USD. So per unit price, per kg price is 0.20 USD. PO created. Let's make a note of that. Now with reference to the purchase order, I'm going to have the goods receipt or MIGO. So we are procuring this material 50 units, and other details are there, purchase order data. So everything fine, item okay. Document posted. Now with reference to this, let's see the accounting documents. So we got the accounting documents. Accounting document here, FI MM integration point of view, the document number 50005. Here, for the difference point of view, I added one cost object, and for that purpose, the cryptic document I have, and one document is for material ledger point of view. If you'll check this document, the accounting document, you won't find any difference here. So here you can see the inventory price is updated. Whatever the standard price is updated, so accordingly it is evaluated. 50 units at a price of the standard price, whatever it is material updated, because we know that in standard price, the price is not going to change. GRR updated 50 into 0.20, that is as per my PO, that price is updated, and the difference amount is updated here. So you can see as per my this accounting entry, so this inventory price is updated. The inventory price updated, whatever my material price updated. That means whatever my material master is updated, let's verify it. Or let's go to the inventory directly. Material ledger, CKM3. 647, the material we have purchased. And the price is updated here, the standard price. 0.08. So 0.08 is my material price, which is updated as standard price. And on that basis, it is valuated, and there is a GR, goods received, that is for 50 kg. And accordingly, the price is updated. And the price, you can see the PUP price changed, but still the price is same. The ending price is 0.08, because we know that in standard price, the price is not going to change. If in case of moving price, it is going to change, but in standard price, it is not going to change. Okay, so here the material price is updated, this one. So the material price is updated 3.50, that is our raw material stock, right? So this is our 3.50 USD updated. Then as for the purchase order price or the PO price, the material price is updated, GRR price is updated 6. This is 10, it is updated. Check once the PO also. Okay, so 50 kg into 0.20 USD. So accordingly, the GRR price or the GRI amount is updated 10 USD. So this is our 10 USD. This is our GR price. And how we got it? So we got 50 units. So we purchase here 50 unit at a price of 0.20. Sorry, my mistake. In wrong place, I have recorded this one. This will be your GRR credit. So this is 10, and I got this one 50 into 0.20. Whereas material price is updated as per the standard price. So this is evaluated at standard price. Then difference amount is recorded here, which is 6.50. 6.50, the difference between your GRR price and inventory price. This is as per our transaction or document currency. The local currency is INR, which is updated here. So I have updated the material price with INR 6 in my material master. Just have a look into this. 6. So procurement we are doing here. How many items? 50 items. So 6 into 5, 6 into 50, 300. So that's why it is updated here. It is my company code price and it is my group currency. Okay, so we have posted the GR, and with reference to the GR, we got the accounting document. So this is my accounting document posted. This is my accounting document, and here we capture the price difference. This is my purchase price difference, and this purchase price difference also having one cost center I linked here. So because this difference or this one need to be transferred to the cost center, and then this will be transferred to the cost of production calculation point of view. So that I linked here, and this will be our cost. Okay, the purchase price is updated here, and because of this, the difference amount captured from the material ledger point of view. This is your difference amount because your material price is evaluated as per the group currency. So 50, and this is our preliminary valuation. So price difference is 6. So which is captured in the material ledger, and it is because of your GR. Because of this GR, this one is evaluated. Okay, so this is my material ledger point of view, and this is my accounting entry. This is our accounting entry. So this is our difference amount. Now I'm going to process with the invoice, and let's see invoice point of view if any changes are there or any difference we are going to capture. And in this case, you can see exchange rate difference is not there because there is no exchange rate difference. Whatever I process this GR with as per my server. Now here intentionally I'm going to make some difference, or I will change the exchange rate. Then we will capture that difference also with reference to our invoice. So I'm going to process the Miro, but before that, let me change the exchange rate in system so that we will have some exchange rate difference also. This is our purchase price difference. Now I'm going to show you the exchange rate difference. Okay, so let's take some changes here. Let me change here. Suppose I will take this one 10. This is the rate, let's say updated rate. Assume that I'm processing this one in a different date and the rates are different. Now I'm going to process the mirror or the invoice with reference to the purchase order. This is my tax code. So here accounting entry GRIR account is going to debit, vendor is going to credit, and some difference will be there because of exchange rate. Let's see. So this will be my 10.50 as my invoice amount. So GRIR account debited, initially it was credited with 10 USD. Now it is going to debit with 10 USD. GRIR is going to debit with 10 USD. Then vendor is going to credit here 10.50. 10.50. And input GST is there 0.50. So right now I'm in local currency, so that is why I can't see here any difference. If I will change my currency, here you can see difference is there. Now you can see some difference is there. Okay, so now as when I change my currency from USD to INR, you can see difference captured here. And this is your accounting entry. Now your vendor price is this one, then your GRIR account is debited, then your receivable tax is debited, and there is one difference, exchange rate difference is captured here. And this one we are going to reflect in our local currency, right? So let me post it. So this is your accounting document. When I'm in local currency, when I'm document currency, which is USD, there is no exchange difference. But if I will change my currency to my local currency, you can see difference captured here. And same also reflected in your uh, material ledger point of view. And this was your question. So if material ledger is activated and if there will be any procurement, then how we are going to handle the price difference? Now you can see this price difference is there. Let me refresh it. Now see here. So we captured two difference here. One difference is because of the purchase price difference. This is one difference. This difference is because of GR. And one more difference, this is your exchange rate difference. This is at the time of invoice. So because of invoice, this is difference. And because of price difference, this is the difference. Okay, but as I have maintained the material with standard price, you can see with these transactions, your actual price changed from my opening price was 6. The standard price was maintained with 6, and the closing inventory is 6 because of the standard price. So until unless we have not completed our period activities, so this price is not going to change. But you can see during these transactions, my Actual valuation is recorded and the price it's changed. So as per the transaction, the price is changed 16.53 and this difference is recorded here. And everything will be part of our AC docket table. So answer to the question, so what will be the material ledger impact in the procurement? Any difference. So I have taken here two difference. So one difference is your price difference, which is in this example 300 because of the GR. And in GR there was no exchanges difference. Then one more difference I captured here with reference to our exchanges difference, and that is 9.46. Okay, and you can verify your source document. So this is the source document, which is our goods received. With reference to GR, we got this accounting document and material ledger updated, where we captured the difference of 300. So in this example, the difference was, it is in USD, and we captured here the difference was with, let me go to the accounting document for this. So raw material stock is debited. Now it is in INR. Last time I have explained you on USD. Now it is in INR. So raw material price was updated as 6, and we procured here at a price of 50 units we procured. So raw material price is 6 into 6 my updated standard price. So 6 into 50 kg, that is 300. This is my material price. GRIR account credited with this price. Okay, so it is equivalent like our 0.20 as per the exchange rate evaluated. It is 816.99. So this is your GRIR. And due to this, there is a difference is there. And this is your difference amount, which is your purchase price difference. This is purchase price difference 51699. Similarly, when we process the invoice, that time also difference was there. So that difference, price difference, we captured here in material ledger. Now check this one. This is our invoice, vendor invoice. And with reference to this also, we captured the difference. This is our accounting document. This is our vendor invoice. And here also we captured, it is in USD. Check to local currency. Here also we captured the difference, but this difference is your 9.46, and that is also we have recorded with our material ledger. 9.46 with reference to invoice. So whenever there will be procurement, and in this procurement scenario, we have captured difference with reference to GR and with reference to invoice and material ledger point of view, impact will be there. So answer to this question, yes, impact will be there. So you can use these two scenarios or two examples for answering that questions. Similarly, in some other scenario, I will show you when there will be any production difference will be there, variance will be there, so that how it will reflect in the material ledger. I hope you got you like this scenario. Any question, anything, feel free to post in the comment section. I will try to answer that one. Or if you have any questions related to your interview you are facing, you are struggling, feel free to come update in the comment. I will add one scenario for that one. Thank you very much.